this chapter, number 1, we are going to first discuss about the few learning objectives. That is, objective number 1, distinguish financial accounting from management accounting. Learning objective number 2, understand how management accountants help firms make strategic decisions. 1.3, describe the sets of business functions in the value chain and identify the dimensions of performance that customers are expecting of companies. Objective 4, explain the 5 steps decision making process and its role in management accounting. And step number 5, describe 3 guidelines management accountant follow in supporting managers. One by one we will discuss individually. Number 1, accounting discipline overview. As we know that the accounting is the language of business. What's the difference between the management accounting, financial accounting and the cost accounting? First, I am going to tell you about the management accounting. Management accounting measures, analyzes and reports financial and non-financial information to help managers make decisions to fulfill organizational goals. Management accounting needs not be GAAP compliant. In short, the management account In short, management accounting is the process of preparing reports about business operation that help managers make short-term and long-term decisions. It helps a business pursue its goals by identifying, measuring, analyzing, interpreting, and communicating information to manager. Or we can say that management accounting is the internal accounting, right? It doesn't need to be GAAP compliant, right? Management accountant need not be GAAP compliant. GAAP mean generally accepted accounting principles. Management accounting involve preparing and providing timely financial and statistical information to business manager so that they can make day-to-day and short-term managerial decisions. Now move towards financial accounting. Financial accounting focus on reporting to external user including investors, creditors, banks, supplier, and governmental agencies. Financial statement must be based on GAAP. So it must be based on generally accepted accounting principles. Financial accounting is a specialized branch of accounting that keeps track of a company's financial transactions. Using standardized guidelines, the transactions are recorded, summarized, and presented in a financial report or financial statement such as income statement or a balance sheet. Cost accounting. Cost accounting measures, analyzes, and reports financial and non-financial information related to the cost of acquiring or using resources in an organization. Or we can say that the cost accounting is a business practice in which we record, examine, summarize, and study the company cost spent on any process, service, product, or anything else in the organization. This helps the organization in cost controlling and making strategic planning and decision on improving cost efficiency. Such financial statement and ledgers give the management visibility on their cost information. Management get the idea where they have to control the cost and where they have to increase more, which help in creating a vision and future plan. There are different types of cost accounting like marginal costing, activity-based costing, standard costing, lean costing, right? We will discuss in future in our management accounting course and cost accounting. Cost accounting, or we can say, is a subset of management accounting. First, we need to focus on the cost, right? We need to focus on the cost. We need to analyze the cost If we analyze the cost or we will calculate the cost, the data, the cost accounting data is helps in management accounting, right? Manager take decision on the basis of that data, right? And the past data. I have already told you about the cost related info, or you can say the cost related info. Major difference between management and financial accounting. In this, we will discuss about the management accounting and the financial accounting. Both differences. Purpose of information. In the management accounting, the purpose of information is to help manager make decision to fulfill an organization goal. That's why I said this is the internal accounting, right? In the financial accounting, communicate organizations' financial position to investor, banks, regulator, and their outside parties. In the financial accounting, the information is provided to the investor, banks, regulators, and other parties. Primary user, manager of the organization, because in the management accounting, the manager have to take decisions. So the primary user of this accounting is the manager. Okay, in the financial accounting, external users such as investor, banks, regulator, and supplier. These all are the external user. Why the investor want to get this info about the company? Because he want to invest. Banks, regulator, tax authorities, we can say the government bodies, and supplier, they have interest in the organization. That's why they see the financial statements, right, of the organization. Focus and emphasize management accountant. This is future oriented budget for 2014 prepared in 2013. We can say if we want to prepare the budget of 2014, so we will focus on the budget of 2013 or the past data, right? But this is the future oriented budget prepared for the future, right? So this is future oriented. Okay, in the financial accounting, the past oriented reports on 2013 performance prepared in 2014. 2013 past data performance or past information is used to prepare report for in 2014. Rules of measurement and reporting. Internal users and reports don't have to follow GAAP but are based on cost benefit analysis. They don't need to focus on GAAP, right? Generally accepted accounting principle. But in financial accounting, the financial statements are prepared on the basis of GAAP and other IAS and be certified by external independent auditor, right? Time span and type of reports, it's vary from early information to 15 to 20 years with financial and non-financial report on products, department, territories, and strategies. So time spans used in management account, it's start from R to 20 year, right? And the data is financial and non-financial about product, departments, their territories, and strategies. And in financial accounting, annual and quarterly financial reports primarily on the company as a whole. Okay, behavioral implication in the management accounting designed to influence the behavior of manager and other employee. In the financial accounting, primarily reports economic event but also influence behavior because manager compensation is often based on reported financial results. In learning objective 1.2, first we will discuss about the management accounting. Management accounting also is known as managerial accounting, and it's a process of providing financial information and resources to the manager in decision making. Management accounting is only used by the internal team of the organization, and this is the only thing which make it different from financial accounting. In this process, financial information and reports such as invoice, financial balance sheet is shared by finance admin with the management team of the company. Objective of management accounting is to use this statistical data and take a better and accurate decision, controlling the enterprise, business activities, and development, and how it helps management accounting help answer important questions such as who are our most important customer and how we be competitive and deliver value to them. And number two, what substitute products exist in the marketplace and how do they differ from our own? Number three, what is our most critical capability? Number four, will adequate cash be available to fund the strategy or where additional one needs to be raised? Right? So we need to answer or we need to help answer important questions. Right? Next is management accounting and value.